Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Kevin Mahn, President and Chief Investment Officer with Hennion and Walsh Asset Management. Kevin, it's great to see you as always. Welcome back to Trade Talks.
Thanks so much, Jill. Happy to be here.
All right, we've got a lot to cover since our last quarterly interview. What should investors make of the stock market volatility we witnessed earlier this week?
2021, Jill, has been a year marked by a relative lack of volatility. Consider that there have been 180 trading days thus far this year, and in only 10 of them have there actually been a daily move of 1.5% or more. In 2020, that occurred nearly 30% of the time. So unfortunately, the market doesn't always move up. And in this case, we saw some volatility on Monday, thanks in large part to concerns over Chinese property developer Evergrande Group. But that should just remind investors to revisit the diversification that they have in their portfolios and not try and time the market. As we know, trying to time the market can often be an exercise in futility.
The Federal Reserve also spoke again this week. What should we expect from them going forward?
Yeah, the Federal Reserve gave some interesting updates as it relates to their TNT program, as I like to refer to it. The first T being, of course, tapering their monthly amount of $120 billion in bond purchases. The N being shrinking the size of their $8 trillion balance sheet through the outright sale of bonds. And of course, the final T being actually tightening, using their federal funds target rate to increase interest rates. What we found is that in all likelihood, if the pace of the economic recovery continues, that I believe that they will announce their tapering plans after their next scheduled meeting in November. As it relates to shrinking the size of their balance sheet, Chair Powell did say that he wants to wait until they actually start tapering before they consider selling bonds, and certainly before they actually start considering raising interest rates. And as we know now from the updates to that infamous dot plot chart, it looks as though now there might be one interest rate hike in 2022 of 25 basis points and perhaps 3 more 25 basis point hikes in 2023. So in all likelihood, Jill, rates are going to stay lower for longer. That's good for stocks, but that can create some problematic issues for those looking for attractive pockets of income opportunities.
Where do you see potential growth opportunities for the balance of the year?
There's some interesting statistics out there that suggest there is more upside for the stock market in general. Consider that the S&P 500 has now recorded positive return in 7 consecutive months. And according to LPL, historically, when that happens, 93% of the time we see positive returns over the next 6 months with an average return of roughly 8%. But I think the opportunities going forward go beyond just U.S. large cap stocks in areas such as small caps or that growth to value trade that has taken somewhat of a hiatus and could be benefited from infrastructure spending. And then last but not least, e-commerce. We saw with that August report on retail sales coming in much stronger than expected, I believe will lead to a record holiday shopping season, which should benefit companies in the e-commerce ecosystem.
And finally, we know that fixed income is going to be a bit of a challenge. Are there any potential income opportunities for investors to consider?
Yeah, great question, Jill. And I think there are 2 areas for investors to consider right now. First being municipal bonds or closed-end funds of municipal bonds, and the second being preferred securities. Preferred securities, as we know, can provide for a high level of current income potential, and municipal bonds right now have a unique supply-demand imbalance that could lead to additional upside price potential in addition to attractive pockets of tax-free income, especially if income taxes go higher. Consider this stat, last stat for this interview, Jill, but in the month of September alone, there are roughly $35 billion in principal and interest payments due to municipal bond investors. Yet there's only roughly $31.5 billion of new supply expected. That $3.5 billion supply demand imbalance, we think, presents upside price appreciation potential in addition to that income that all the investors are looking for right now.
All right, Kevin, we appreciate the insight. As always, have a great birthday weekend, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.